I guess I would say it this way. I continue to think that it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close but didn't get the job done, and inflation springs back and we have to go back in, and now you really do worry about expectations getting unanchored and that kind of thing. This is a very difficult risk to manage. Whereas, of course, we have no incentive and no desire to over-tighten, but if we feel like we've gone too far, we can certainly, and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it. It's not happening yet. Inflation in core services ex housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other two sectors, representing less than 50%, you actually, I think, now have a story that is credible, that's coming together. Although you don't actually see disinflation yet in housing services, but it's in the pipeline, right? So for the third sector, we don't see anything here. So I think it would be premature, it would be very premature to declare victory or to think that we've really got this. We need to see, our goal, of course, is to bring inflation down. And how do we get that done? There are many, many factors driving inflation in that sector, and they should be coming into play to have inflation, the disinflationary process, begin in that sector. But so far, we don't see that. And I think until we do, we see ourselves as having a lot of work left to do.
Howard Schneider with Reuters, and thanks as usual. So I just wanted to connect a couple dots here. The statement's made a number of changes that seem to be saying things are getting better. You're saying inflation has eased. That's new. You've taken out references to the war in Ukraine as causing price increases. You've taken out references to the pandemic. You've eliminated all the reasons that you said prices were being driven higher. Yet that's not mapping to any change in how you describe policy. We still have ongoing increases to come. So I'm wondering, why is that the case? And does it have more to do with uncertainty around the outlook, or more to do with you not wanting to give a very overeager market a reason to get ahead of itself and overreact?
So I guess I would say it this way. We can now say, I think, for the first time, that the disinflationary process has started. We can see that, and we see it really in goods prices so far. Goods prices is a big sector. This is what we thought would happen since the very beginning, and now here it is actually happening, and for the reasons we thought. It's supply chains, it's shortages, and it's demand revolving back towards services. So this is a good thing. This is a good thing. But that's around a quarter of the PCE price index, core PCE price index. So the second sector is housing services, and that's driven by very different things. And as I mentioned, with housing services, we expect, and other forecasters expect, that measured inflation will continue moving up for several months, but will then come down, assuming that new leases continue to be soft. And we do assume that. So we think that that's sort of in the pipeline. And we actually see disinflation in the goods sector, and we see it in the pipeline for two sectors that amount to a little less than half. So this is good, and we note that when we say inflation is coming down. This is good. We expect to see that disinflation process will be seen, we hope soon, in the core goods ex-housing, the core services ex-housing sector that I talked about. We don't see it yet. It's 7 or 8 different kinds of services. Not all of them are the same, and we have a sense of what's going on in each of those different subsections. Probably the biggest part of it, probably 60% of that is, research would show is sensitive to slack in the economy, and so the labor market will probably be important. Some of the other ones, the labor market's not going to be important. Many other factors will drive it. In any case, we don't see disinflation in that sector yet, and I think we need to see that. It's the majority of the core PCE index, which is the thing that we think is the best predictor of headline PCE, which is our mandate. So it's not that we're neither optimistic nor pessimistic. We're just telling you that we don't see inflation moving down yet in that large sector. I think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves, we got to be honest with ourselves, we see ourselves as having perhaps more persistent, we'll see more persistent inflation in that sector, which will take longer to get down. And we're just going to have to, we have to complete the job. I mean, that's what we're here for.
Nick Timmeros, The Wall Street Journal. Chair Powell, you observed several years ago that we learned we can have a low unemployment rate without above-target inflation, and we have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
So we've raised rates 4.5 percentage points, and we're talking
¿Pueden escuchar? ¿Se escucha? ¿Se escucha ahora? Mira, a ver. Ok, eso era más o menos lo que habíamos comentado. La palabra ongoing ya la removieron de todo esto. No está por acá. Y en el Summary Economic Projection lo mantuvieron en 5.1. No tocaron nada. Y reducieron para 2024 4.3. Eso significa que en mayo ellos van a volver a subir a 0.25 y y ya después de mayo van a parar, no van a subir más. Y en esta parte de acá habla, sabe, él reconoce la parte de que hay un problema con los bancos. US Banking System, ya. So, él está reconociendo que hay un problema, so probablemente vaya a subir una vez más. Y ni siquiera eso, probablemente eso no suba más. So, lo que se está proyectando es que parará. De hecho, ve, para mayo 3 está 50-50 de que va a parar. So, por eso el mercado lo está tomando positivo. Pero la mejor opción siempre va a ser los bonos, ¿sabes? Ah, ir con TLT. Okay, TLT ahora está cayendo. So, vamos a dejarlo caer y que él salga. Pero sí, básicamente él va a parar. Y esta es toda la ganancia que podemos tener. O sea, sí han subido esta semana con todo lo de que pasó con los bancos. Pero si él para, tenemos todo esto de ganancia. So, TLT puede ir desde los 100 hasta los $150 fácilmente. También la plata. Siempre que la Fed suele parar el interés, la plata suele subir como un 200%, 300%. Pero lo que hay que esperar 20 minutos que él sale. So, esto siempre lo suele hacer, todo el mundo lo sabe. Sube, baja y cuando él salga, probablemente esté por aquí de nuevo el precio. Y ahí es cuando decidimos que vamos a comprar. Pero sí, está claro, ¿sabes? Ellos van a parar en mayo. Después de mayo no van a subir más. Y lo que hay es que ver si en mayo va a subir 25 o no va a subir más, ¿sabes? Esa sería la cuestión. So, si los bancos sigue habiendo problemas con los bancos, él no subirá nada más. Inclusive en mayo podría bajar los intereses. Cualquier caso, para los bonos será muy positivo. So, cualquier cosa que puedan comprar con los bonos será muy positivo. So, sí, exacto. Todo sube. Ese fue el Britpop. Siempre, ¿sabes? Siempre el primer movimiento es bueno, como lo había comentado muchas veces. Ahora debería de volver a esta zona de aquí condenable. A lo mejor podría hasta bajar hasta aquí abajo. Y de ahí empezar a subir. Déjame poner el SPY. Ya, pero si él no es demasiado agresivo, SPY podría hoy... 407, ¿sí? 407 para a final del día. O incluso mañana 407. Inclusive, ¿sabes? Lo que habría que esperar es ver si qué tan agresivo es él. Pero si no es muy agresivo, por ahora lo que hay en el statement es que, ¿sabes? Probablemente SPY para hoy y para mañana cierre en 407. Pero habría que esperar a ver qué nos cuenta él. Pero sí, está muy bien todo. Si se recuerdan, esta fue la que les enseñaba en el video anterior. Yeah. Anticipate that ongoing increases will be in the target range. So, aquí en el mes anterior, él estaba diciendo que, o sea, que no solamente iba a subir 25 en esta ocasión, sino que iba a incrementar mucho más de 25. Pero ya, ¿sabes? Esto ya fue removido, ¿sabes? Ya esto lo quitó. Inclusive hace 2 semanas, cuando él tuvo que declarar frente al Congreso, él dijo que probablemente, ¿sabes? Tendrían que ir mucho más allá de lo que pensaban, o sea, y volvió a repetir lo de ongoing increases. So, esto es lo que todo el mundo estaba esperando, que retirara. Y ahí está, ¿sabes? No hay nada, ¿sabes? So, aquí tenemos aquí, vamos a ver hasta dónde llega, probablemente podremos llegar hasta aquí. Cae, sube cuando salga y ahí veremos qué pasa cuando él salga. ¿Alguien quiere hacer alguna pregunta en el chat? So, este sería, podría ser el siguiente movimiento de SPY. Aquí tenemos la semana pasada, hace en febrero cuando tuvo los highs de febrero. Pasó todo lo de los bancos, cayó. Y ahora vuelve a estar en esta zona. So, parece que quiere romper o estaría rompiendo. Y con este statement de la Fed es muy probable que rompa fácilmente. ¿Se escucha ahora? Ahora sí se escucha, ¿no? Sí. A ver. So, ya, muy probable que antes del viernes estaremos aquí arriba en 4.15 de nuevo. Y hoy podríamos cerrar acá arriba. En 4.06, 4.07 podríamos cerrar. ¿Sabe? Teniendo en cuenta de que él no sea muy agresivo. Ahí está. SPY subiendo de nuevo. Pero lo normal es que cuando él salga dentro de 10 minutos vuelva a estar por esta zona de aquí. Solamente nos quedan 10 minutos. Eso podría subir y bajar. Si no baja, es que sabe que ya la gente no necesita escucharlo a él. Y se lo va a tomar muy, muy, muy positivo. Pero sí, ahí está, ¿ves? Lo no más normal es que cuando él salga esté por aquí, por esta zona. Y que probablemente algo agresivo que él diga pueda, ¿sabes? Nos pueda llevar más abajo. Pero si él no es muy agresivo, si él es suave como las últimas... press release, probablemente sí, para final del día 406, 407. Pero siempre lo mejor antes de comprar es esperar lo que él salga. Espera un 2. Sí. 407, 406 podríamos terminar el día. Pues fácilmente un 2% en el día de hoy. Ocho minutos hasta que saque Power. Y sí, está ¿sabes? Volviendo a la zona de donde salió. Sí, yo podría venir aquí debajo. Los bonos. Sí, los bonos va a ser la mejor jugada, Luis. Lo mejor que puedes hacer son los bonos. Sí, los bonos hacen lo contrario, pero ya ahora mismo, por ejemplo, el SPY va a subir por unos probablemente un mes, 2 meses, y los bonos van a subir igual. ¿Sabes? Los yields van a bajar, los bonos van a subir. ¿Por qué? Porque en este caso los bonos están en lo correcto. Y cuando vuelva a pasar alguna situación con los bancos, no sé si te diste cuenta, cuando pasó la situación de los bancos, los bonos enseguida, vamos a poner ok. Este es el bono de los 10 años. Eh, en cuanto pasó toda la situación de los bancos, los bonos enseguida empezaron a subir con bastante rapidez. Y hasta aquí, hasta este punto, si buscas, por ejemplo, si miras esto aquí fue a finales de febrero. Y si buscas el SPY, te vas a dar cuenta que la gráfica era la misma y ahora se acaba de dar vuelta. ¿Por qué? Porque SPY está subiendo, pero porque se cree que la situación de los bancos está bajo control. Pero la Fed, si la Fed está parando con la inflación, porque la inflación vuelve a subir. Si la Fed está parando, es porque ellos ven que probablemente los bancos estén en problemas y no quieren apretarlo más. ¿Por qué? Porque todo el dinero que han perdido los bancos era por estar metidos en esos bonos. El dólar sigue cayendo bastante. Tuvo una buena caída después de todo esto. Sí.
Good afternoon. Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve
Subiendo
Board created
SPY
the
diciendo
Bank Term
que
Funding Program
no hay problema con
to ensure that
los
banks that
depósitos en los
hold
bancos, que
safe
todo
and
está
liquid
seguro.
assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy. Inflation remains too high and the labor market continues to be very tight.
Ahora solamente está
My
leyendo lo que ya
colleagues and I
sabemos ya. Esto es
understand the hardship that high inflation is
escrito que ya
causing,
sabemos ya.
and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this
Hablando sobre la
quarter,
inflación,
although
que
some of
los
that
números de inflación
strength
están
may
saliendo
reflect the
altos.
effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants
Vamos a esperar a que saquen las preguntas, porque en realidad en las preguntas donde él da porque esto ya se sabe, este movimiento ya pasó ya, ¿sabe? Aquí no hay más movimiento hasta que no empiezan las
The
preguntas.
median unemployment rate projection in the SEP
Todo
rises
esto
to
que está diciendo ya lo sabemos ya.
4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the
Hablando
change
sobre
in
la
the core
inflación, que la inflación
CPI
vino muy
was
alta.
5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go and is likely to be
Vuelve a
bumpy.
repetir lo del bumpy.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to
Ya,
promote
no le
maximum
gusta a nadie esto que
employment
dijo.
and stable
Porque
prices
volvió a
for
mencionar,
the
¿sabe?
American people.
En el statement había dicho una
My
cosa,
colleagues and I
pero ahora
are acutely
mencionó
aware
sobre...
that high inflation imposes significant
yeah.
hardship
Ooh.
as it erodes purchasing power, especially for those least able to meet the higher costs of
Vamos a esperar las
essentials
preguntas, a ver si
like
con las
food,
preguntas...
housing, and transportation. We are highly attentive to the
Básicamente
risks
no
that high
le
inflation
está
poses
preocupando
to
mucho lo que
both
pasa con los
sides of
bancos,
our
le preocupa
mandate,
mucho más la
and we
inflación
are strongly committed to returning inflation to our 2%
que el problema con
objective.
los bancos.
At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 4 3/4 to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking
Los bonos
system
están
over the
subiendo.
past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect
Ya, como le había
economic
dicho, ¿sabes?
outcomes.
La mejor opción siempre va a ser los
It is
bonos.
too soon to determine the extent of these
Ya los bonos se
effects,
viraron
and
completamente con el
therefore too
mercado.
soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These
Ahora está
are little
repitiendo lo que habíamos
changes from
comentado
our
de que
December
no subió a
projections,
5.4, lo dejó en
reflecting offsetting
5.1.
factors.
So, esta es la parte positiva.
These projections
Por
are
eso
not a
subimos.
committee decision or
Pero
plan.
en realidad el
If the
movimiento lo vamos a
economy
tener,
does
¿sabes?
not
El
evolve
movimiento
as
lo tendremos
projected,
cuando empiezan a hacer
the
las
path for
las
policy
preguntas,
will adjust
cuando
as
hagan las preguntas.
appropriate to foster our
Vuelve a estar en el
maximum
mismo precio,
employment
¿sabes?
and
Simplemente
price
está en el mismo
stability
precio.
goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I
Ahora
look
empiezan
forward
las,
to your questions.
las preguntas.
Thank you. Colby Smith with the Financial Times. How confident is the committee that the recent stress that we've seen and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is
Hablando con el
safe.
problema con el
Deposit flows in
con
the
los
banking
bancos, que
system
todo
have
está
stabilized
seguro.
over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we considered.
Oh,
we
dice
did
que
consider
consideró
that
pausar en
in the
este- en
days
este
running up to the
mismo-
meeting. And you see the decision that
Oh,
we
sí,
made,
es, sí.
which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really, it is that the The intermeeting data on inflation and the labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year, more than we'd expected at the time of the SCP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes maybe, some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data.
Ya,
the
esa
evolving
pregunta que
outlook,
respondió
in
que
particular
había
on our
pensado
assessment of the actual and expected effects of
parar
credit
esta misma semana, es la que nos está haciendo subir así. Veremos si le vuelven a preguntar algo de parar.
Mr. Chairman, can you explain the difference between ongoing
Esto es lo que le había
rate
comentado, del
increases
ongoing.
and
Él se le está
firming?
preguntando por el ongoing.
Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know. So.
Do you have concerns that the hike you did today could further exacerbate the problem in the banks?
Entonces, si volviera a parar esta zona de aquí,
No, I mean,
SPY,
with our monetary policy, we're really focused on
se podría comprar.
macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can
call
that produce in the way
para
of tighter
SPY
credit
para
conditions. I think when we
el
think
viernes o
about
para hoy.
the situation in the banks, we're focused on our financial stability tools, in particular our lending facilities, the debt, the discount window, and also the new facility.
Apple ya está corriendo. Ya,
Nick Timmeros
Apple,
of the Wall Street Journal. Chair
1.61
Powell, in your
Apple.
testimony 2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the
Oh,
banking
van a seguir
sector.
Apple.
And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and, the people who write the minutes will be very carefully counting, but I'll tell you what I heard. What I heard was a significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that turned out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their
Okay,
S&P
acaba de decir que
forecasts.
si-
I think there may also just have been, remember, this is 12
Que
days
si
ago.
la inflación vuelve a salir más
We're
alta,
trying to assess something
va a
that
volver a
just
subir
is
las
so
tasas de interés.
recent. And it's people,
So, eso no es bueno.
it's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar.
Pero esto va a ser
outcomes for
olvidado,
December.
¿sabes? Probablemente bajamos acá,
And it-
esto
you
va a
know,
ser
in a
olvidado
way,
y todo el mundo se va a quedar
the
con
early-
que
the
él
data in the first part, the first 5 weeks
pensó
of the
parar,
intervening period
quiere parar
pointed
y
to
probablemente en el
stronger
próximo meeting
inflation
vaya a
and
parar.
stronger labor market, so that pointed to higher rates. And then this latter part, kind of the possibility of credit conditions tightening really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
You know, we know that we have other tools in effect, but no, we think our monetary policy tool works, and we think, you know, many banks, our rate hikes were well telegraphed to the market, and many banks have managed to handle them.
SPY 4.
Hi, Victoria Guida with Politico.
402.
I wanted to ask, you, along with the FDIC and the Treasury, the Fed Board decided to invoke the systemic risk exception to allow uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why that decision was made. Was it purely a confidence issue, or was there a concern that there would be some sort of economic contagion or financial contagion from the failure of these banks?
The issue was really not about those specific banks, but about the risk of a contagion to other banks and to the financial
10 años
markets.
3.6,
That was the issue.
3.5.
Okay, and then can you also, just to follow up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation?
So Vice Chair Barr is of course leading that review, and he's responsible for it in his capacity as Vice Chair for Supervision. I realized, you know, right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen? And so what we did was early Monday morning, we sat down and said, let's do this. And he was obviously going to lead it in his capacity. So I don't, you know, my role was to announce it, and I get briefed on it, but I'm not involved in the work of it.
Hi, Chair Powell, Howard Schneider from Reuters. So I want to go back to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was, I forget the word you used, but gratefully underway or something like that. Is disinflation still occurring in the U.S. today?
Yes, I mean, what actually happened, Howard, was I got the question 12 times. So maybe it's a feature, not a bug. But yeah, absolutely absolutely the same. The story is intact. So it's really three parts, right? Goods inflation has been coming down now for 6 months. It's proceeding
mira los
more
10 años,
slowly than we
3.9.
would have liked, but it's certainly proceeding.
Aquí es donde está el dinero.
Housing services is
SPY solamente
really a matter
correrá
of
por unos
time
meses, pero el
capsule. We
dinero está
continue
acá,
to
en los
see the
bonos.
new leases
4%
being signed at
los
much
10
lower
años.
levels of inflation. So that's 44% of the core PCE index, where you've got a story that's ongoing.
Y
Where
recuerda
we
lo que
didn't
hablamos
have
ayer,
in
por ejemplo,
February
este
and
es el
we still
Nasdaq.
don't have now is a sign of progress in the non-housing services sector.
En nada se encuentra
that is
sobre los
some-
niveles de febrero. Si
You
ven
know,
aquí
that's just
debajo,
something that will have to come through softening
estos son los niveles de
demand
febrero,
and
¿sabe?
perhaps some softening in
15,
labor
13 de
market
febrero,
conditions.
Nasdaq
We
ya
don't
pasó
see
esos
that
niveles.
yet, and that's of course 56%
SPY
of the index.
todavía no ha llegado a
So
esos
the story
niveles.
is pretty much the same.
Significa que
I will
TEC
say
está
that the
muy
inflation data
adelantado
that we got, to
al
your
mercado en
point,
general.
really pointed to
Y los
stronger
small
inflation.
cap, que serían
Follow up on that.
tenemos comprando
I was curious
TNA,
why you don't see more
están
coming
acá
from the
debajo,
credit
están en
crunch,
los
'cause
lows.
it seems
So,
to me that's
mira todo el
something
espacio que tenemos en
that you'd
TNA
actually
para
welcome
subir.
to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue. And we don't really see it yet. It's so people are making estimates, you know, people are publishing estimates, and but it's very kind of rule of thumb, guesswork almost at this point. But we think it's potentially quite real, and that argues for, you know, being alert as we go forward, as we think about further rate hikes. For us, we'll be paying attention to the actual and expected effects from that.
Hi, Chair Powell. Gina Smilik from the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit, I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to the questions around supervision. So at a basic level, Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, and a very, very fast run, faster than the historical record would suggest. So as for us, so for our part, we're doing a review of supervision and regulation. My only interest is that we identify what went wrong here. How did this happen is the question. What went wrong? Try to find that. We will find that. And then make an assessment of what are the right policies to put in place so that it doesn't happen again.
A
And then
punto de ir
implement those
para
policies.
arriba de nuevo.
It would be inappropriate for me at this stage to offer my views on what the answers might be. I simply can't do that. Vice Chair Barr is leading this, and I think he's testifying next week. So, but that will be up to him. So that's really where it is. The review is going to be thorough and transparent. It is clear to your last question. It's clear that we do need to strengthen supervision and regulation, and I assume that there will be recommendations coming out of the report, and I plan on supporting them and supporting their implementation.
And the final point, can we feel confident that these weaknesses don't exist elsewhere, given that they got missed at this bank?
These are not weaknesses that are at all broadly through the banking system. This was a bank that was an outlier in terms of both its percentage of uninsured deposits and in terms of its holdings of duration risk. And again, supervisors did get in there, and they were, as you know, obviously, they were on this issue, but nonetheless, this still happened. And so that's really the nature of the of the review, is to discover that.
Michael McKee from Bloomberg Radio and Television. You've been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time. Following today's decision, the markets have now priced in one more increase in May, and then every meeting the rest of this year, they're pricing in rate cuts. Are they getting this totally wrong from the Fed, or is there something different about the way you're looking at it, given that you're now thinking that moves might be appropriate as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't. I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline
No
expectation.
espera,
Well, if I could follow up and ask, as you look forward into
No espera bajar
the rest
intereses
of
este año.
the year here, are you saying that what you see and the 5.1% basically consensus is based on it will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen? In other words, what should people think about in terms of how the Fed thinks about how far it is from the terminal?
It's going to depend. Remember, we're looking, for purposes of our monetary policy tool, we're looking at what's happening among the banks and asking, is there going to be some tightening in credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So the key is we have to have policies got to be tight enough to bring inflation down to 2% over time. It doesn't all have to come from rate hikes. It can come from tighter credit conditions. So that we're looking at, and we
Voy a repetir de que no
highly
tendremos
uncertain how long
rate
the
cuts este
situation
año,
will be sustained
que no
or how
bajará las intereses
significant
este
any of
año,
those effects would be. So we're
que
just gonna have
probablemente
to
pare,
watch.
pero no hay
In
bajada
the
de intereses,
meantime,
simplemente los va a mantener hasta final de año.
You know,
Es lo que se espera.
Obviously, at the end of the day, we will do enough to bring inflation down to 2%. No one should doubt that.
Go to Rachel Siegel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy, but there's also growing concern that there are financial
que empezó a
stability
mencionar
risks
esto
from the
de que,
commercial real
ah,
estate market and loans that will begin to
Probablemente
roll
no
over
pare este
later
año,
this year and next.
no haga cautos
and
este
that
año,
smaller regional banks
empezamos a
also
caer. Pero si llega
disproportionately
acá,
hold those
sería,
loans.
¿sabe?
Is there a
volver
risk
comprar,
that could
si no
mimic the
dice
kind
nada
of
más raro.
what we saw with SVB to banks that disproportionately are focused in commercial real estate?
So, you know, we've well aware of the concentrations people have in commercial real estate. I really don't think it's comparable to this. The banking system is strong, it is sound, it is resilient, it's well capitalized, and I really don't see that as at all analogous
Acá
to
tenemos
this.
el,
Another question. Would you
200.
be open to an independent investigation separate from the Fed's probe?
I welcome, it's 100% certainty that there will be independent investigations and outside investigations and all that. So we welcome, when a bank fails, there are investigations, and of course, we welcome that.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky, so do you need help from the fiscal side to get inflation down faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that we take fiscal policy as it comes to our front door, stick it in our model along with a million other things, and we have responsibility for price stability. The Federal Reserve has responsibility for that, and nothing is going to change that. So we will get inflation down to 2% in time.
And if I can follow on that, but they're working, the spending that's happened is working against what you are doing, right? So it's prolonging inflation?
You know, if you have to look at the impulse from spending, because spending was, of course, tremendously high during the pandemic, and then as the pandemic programs rolled off, spending actually came down. So the sort of fiscal impulse is actually not what's driving inflation right now. It was at the beginning perhaps part of what was driving inflation, but that's not really the story now.
Let's go to Neil Irwin.
Hi, Chair Powell. Neil Irwin with Axios. Two questions about aspects of the government's response on Silicon Valley Bank 2 weekends ago. First, why is this new bank funding facility done under Emergency 13.3 authority as opposed to
Esto solamente
expansion
fue
of the
por el tema
discount window, changing
de
the
que
term
no
of the
piensa
discount
parar
window
este
that's
año.
been around a long time? And second,
La
can you
gente no le
discuss
gustó
the
eso.
Fed's role in
Pero en realidad, ¿sabe? Lo que la gente buscaba era
FDIC
que él parara
guarantee
este
of
año.
uninsured depositors,
Y esta partida la
why there's
tuvimos. So, desde aquí
$143 billion
deberíamos
on your
tener
balance sheets
un
last
rebound
week,
para arriba,
supporting that deposit
desde
guarantee.
3.98.
Sure. So 13.3 seemed like the right, we have a little more flexibility under Section 13.3. We've done quite a lot under the discount window as well. We needed to do a special facility that was designed a certain way, so we did it under 13.3. Really no magic to that. It's only available in unusual and exigent circumstances, and it has to meet certain requirements, but it seemed to be the right place. So with the FDIC, we're lending to in effect, we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Chris Rugaber.
Thank you, Chris Rugaber at Associated Press. The SEP suggests one more rate hike, as does the change in the language in the statement, in which suggests that you're perhaps nearing the end of a cycle of rate hikes. Do you feel, though, that if inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end? Thank you.
No, absolutely not. No, if we need to raise rates higher, we will. I think for now, though, as I've mentioned, we see the likelihood of credit tightening.
Hemos
We
estado
know
viendo
that
desde que dijo que no
can
iba
have an effect on
no iba a parar, no iba
macroeconomy, on demand,
cortar este
on
año
labor
los
market, on
intereses.
inflation. And
So
we're
vemos si
going to
aguanta
be
esto
watching
aquí.
to
Si
see
aguanta
what
esto
that
aquí,
is.
sí,
And
volveremos
we'll also be watching what's
a lo
happening with
normal que
inflation
sería
and in the labor
terminado
market.
en 4.06,
We'll be watching
4.07
all
sería
those things.
lo lógico.
And of course, we will eventually get to tight enough policy to bring inflation down to 2%. we'll find ourselves at that place.
Hi, Chair Powell. Thanks for taking the question. Kyle Campbell with American Banker. I have a couple questions about the balance sheet. First of all, I'm curious at what point the financial supports that the Fed is extending through the discount window and through its enhanced lending facility might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout the banking system, and at what point you might be concerned about it being scarce for certain banks.
So, so people think of QE and QT in different ways. So let me be clear about how I'm thinking about these recent developments. So the recent liquidity provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases
Esto
of
no está bien.
longer-term
Si
securities.
Trump aquí no está muy bien.
Large-scale purchases of long-term
Todo esto fue
securities
desde que dijo
are
que no
really meant to
no
alter the
cortaría este
stance
año
of
los
policy by
intereses.
pushing up the price and down the rates, longer-term rates, which supports
Yeah.
demand through
Eso,
channels we
no está bien.
understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening in financial conditions. So that's working. In terms of the distribution of reserves, we don't see ourselves as
Esa sería la zona de stop loss.
running into reserve shortages. We think that our program of allowing our balance sheet to run off predictably and passively is working. And of course, we're always prepared to change that if that changes, but we don't see any evidence that that's changed.
Hi, Chair. Katerina Saraiva with Bloomberg News. The minutes of the January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed, do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't recall the specifics of that. It's quite an interesting 7 weeks, but I will tell you though that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as it is now on the public record, the supervisory team was apparently very much engaged with the bank repeatedly and was escalating, but nonetheless what happened. And so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is to try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is the speed of I'll come back to that, the speed of the run. It's very different from what we've seen in the past, and it does kind of suggest that there's a need for possible regulatory and supervisory changes, just because supervision and regulation need to keep up with what's happening in the world.
Can you confirm whether or not the board knew about these escalations by the examiners in San Francisco?
Yeah.
I will have to come back to you on that.
Esta era la stop loss line.
Simon Urbanovich with The Economist. Thank you very much. Chair Powell, you've stated twice today that all depositors' savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't Congress have a say in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors?
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
Go to Greg
Thank you, Chair Powell. Greg Robb from Market Watch.
Esa
I
última,
was wondering if you could give us a
la
little
última
bit more
pregunta
color. You
respondió,
gave just a
podríamos
little
hacer que
bit of
volvamos
color.
a
You
estar aquí
said
arriba.
during the first week of the Silicon
Si vuelve a
Valley
entrar en esta zona de
weekend, you
aquí,
said
sí,
the
podemos
question you
cerrar
guys
sobre las
asked was,
406,
how did this happen when you
405,
saw Silicon Valley
pero
Bank?
si no vuelve a entrar
So
en esta
I was
zona,
wondering if you could go to the Credit
probablemente
Suisse
394,
merger. I mean, wasn't that the
395.
big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well, and I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well so far.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's an estimate of what will happen as demand slows and as conditions soften in the labor market. And it's a highly uncertain estimate. And I mean, there's really, we have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher. And if you read your history, as I'm sure you have, you can see that if the central bank doesn't get inflation back in place, make sure that inflation expectations remain anchored, you can have a long series of years where inflation is high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking to avoid that, and and to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
But I guess the question is, historically, it's hard to...
Mr. Mike, please.
Yes, sir. Historically, it's been hard to contain unemployment, and the question is, do you worry about some sort of snowball effect, and how do you factor that into your projections and your policy?
It depends on whether so recessions tend to be nonlinear, and so they're very hard to model. The models all work in a kind of linear way. If you have more of this, you get more of that. But when a recession happens, the reactions tend to be nonlinear, and that's so we don't know whether that'll happen this time. We don't know. If so, we don't know how significant it will be. And so, we're very focused on getting inflation down, because we know in the longer run that is the thing that will most benefit the people we serve. That's how we can have we've had very strong labor markets through these long expansions that we've had. 4 of the 5 longest, or 3 of the 4 longest expansions in U.S. history have been really since the high inflation period. And the reason was inflation wasn't forcing the central bank to come in and stop an incipient or an expansion. You can have very, very long expansions without high inflation, and we had several of those.
Si no hace un rebound a partir de este punto de 3.95,
you see low unemployment,
va a ser
you see
bien
the
violento
benefits
hasta
of wages going to people
3.94.
at the lower end of the wage spectrum. It's just a
Inclusive
place
podría
that we
estar
should try to
3.90.
get back to.
Hi, Chair Powell. Jean Young with Market News. I just wanted to ask, with all the events of the past 2 weeks, do you still see a possibility of a soft landing for the U.S. economy?
It's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been changes in that.
Dio el bounce aquí en
The question will be how long
en
this
la
period
zona
is
de,
sustained. The
de
longer
más
it's
baja de ayer.
sustained, then the greater will be
Esto
the
fue como una
likely
sobrereacción. En realidad no.
declines or tightening in credit
La parte buena es que él
standards,
quiere parar.
credit availability. So
Y
we'll just
esa
have to
reacción
see.
fue
I
sobre
do still
todo
think, though, that
él diciendo
there's a
que no,
pathway
no bajaría
to
la tasa de
that. I think
interés
that pathway still
este
exists,
año.
and we're certainly trying to find it.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious regulatory, particularly immediate attention. And I guess there were 6 of them, so.
And getting to the seriousness of it, how are you going to ensure that banks comply with these citations, take them seriously? How will you enforce them?
That is a great question and is right in the heart of what the review will be doing
acaba de
under Vice Chair
decir-
Barr's leadership. So that's,
Entonces escucharon que
I think that's
había
what
6
you think
bancos
about, you know,
en
what
problemas.
can we do to make sure, but again, that's not for me to
Solamente
answer
4.
So you
today.
don't have specific thoughts on that?
Well, see, if I did, I wouldn't share them because
tengo,
I really, you know, this
Silvergate,
review's going on.
SB,
And, you know, I
Silicon
want
Valley
to,
y
I want
Credit
nothing other
Suisse.
than us to
Credit Suisse.
find out what happened and why, figure
¿Cuáles
out
son los
what
otros
we
dos
can
que estaban en
do
problema?
better, and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts, you know, it just isn't
Probablemente
appropriate.
FRC.
There's a real serious review going on with people from all over the Federal Reserve System who are not connected
FRC
to this, you
cayendo.
know, to
Oh,
this
wow.
work, not connected to this bank. And under again,
Y probablemente
Vice Chair
sea
Barr's
wow.
leadership, and I'm confident that it will produce a satisfactory result.
Okay, we'll go to Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Curious, how do you view
Yeah,
financial
FRC down
conditions right now?
10%.
If credit becomes expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures prompted any discussion
La última
around
pregunta.
changing the implementation of the balance sheet runoff? Thank you.
So we haven't really talked about changing the
Veremos si
balance
nos
sheet
dan con la última
implementation.
pregunta.
That's
Eh,
not something
tenemos
we've discussed
un-
yet. As I
una
mentioned,
doble
we're always
acá,
willing to change
probablemente.
that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question before that was, just give me a,
Curious how you view financial conditions now, and if
Yeah,
credit were
okay.
to tighten enough, if that would prompt a rate cut.
So, financial conditions seem to have tightened, and probably by more than the traditional indexes say,
Puede ser que no sea
because
doble
those
ahí,
traditional
vamos a
indexes
ver,
are
pero-
focused a lot on rates and equities, and they don't
FRC sigue
necessarily
cayendo.
capture lending conditions. So we think that, though. So there are other measures which if they're focused on, you know, bank lending conditions and things like that, they show some more tightening. The question for us, though, is how significant will that be, and how, you know, what will be the extent of it, and what will be the duration of it? And then, you know, once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy over what period of time. And so, you know, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, you know, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case, and, you know, so that's all I have to say. So,
Ok, ya terminó.
thank you very much.
So, no estaría mal comprar acá. Estos de acá son los bonos. Y como les había comentado, ¿sabes? Los bonos siempre son la mejor opción. ¿Por qué? Porque él quiere parar. Al mercado no le gustó que él no quiera cortar este año. Pero eso es hoy, ¿sabes? No se sabe si en mayo va a querer cambiar su idea. Si vuelve a subir por esta línea, todavía podría cerrar en 405 o 407. Ya. Está subiendo desde que terminó. Porque esto era algo que se sabía, ¿no sabes? No hay ninguna situación para cortar los intereses. Veremos si logra salir de esta zona de acá. Al menos First Republic está subiendo. Bank of America en 28. Wow. Esta mañana Market Burger habló de UBS y comentó que sería uno de los bancos que más problemas tendría. Recuerda que este banco fue el que compró a Credit Suisse el fin de semana, durante el fin de semana. Esta de aquí es TLT, que era lo que le comentaba que sí será la mejor opción, sobre todo para comprar en acciones, que son los bonos. Okay, seguimos en esa zona. Necesitamos subir de esta zona. Sigue en esa zona, no quiere salir de esa zona. Pero, lo que les comentaba, ahí parece que quiere romper. Pero SPY ya subió lo que iba a subir. Ahora, la plata, o sea, la plata ya vuelve a estar en prácticamente la parte de arriba. Los bonos están subiendo también. Oro está subiendo. Ok, ahí va SPY. Tocó el nivel que había comentado. Hizo la W. Y ahí va. Si sobrepasa esta zona, ¿sabes? Volvemos a lo inicial. Debería de cerrar en 406, 405, 407. Podemos venir aquí abajo, hacer un retest. Y a partir de ahí volver a subir. Pero el punto sería este aquí, ¿sabes? Si sobrepasa esta zona de aquí, 402, irá directo a 405, 406. Igual si vuelve a caer. Si vuelve a caer de esta zona, volveremos al mismo problema que teníamos antes. Pero espero que hayan tomado la que les comenté, que era TLT. Ya, TLT no tiene problema ninguno. Pero si TLT está subiendo, TLT sigue subiendo, SPY debería ser capaz de volver a subir. ¿Alguien tiene alguna pregunta? Escriban en el chat. Esta es tu zona. So, de aquí para arriba call, de aquí para abajo sería put. Ya no es bueno, no es bueno que hayamos caído de esta zona. Pero como vuelvo y repito, TLT está bastante estable. Sigue jugando con esa zona, no la quiere soltar. La plata también sigue subiendo. Es lo que les comentaba, ¿sabes? Donde más dinero probablemente vaya a haber sería en la plata y en los bonos. La plata sigue subiendo sin problema ninguno, ya vuelve a estar en la zona alta de cuando Powell dijo que no iba a cortar. La plata sigue subiendo y TLT sigue subiendo igual. Que SPY vuelve a estar en la zona de que podría... De aquí para arriba serían, ¿sabes? Todo positivo. Básicamente no se ha movido, ¿sabes? Está en el mismo precio de cuando empezó. O sea, no ha cambiado nada. Y se esperaba que esto se moviera más de un 2-3%. Y no hay movimiento. Porque la parte de que él quiere parar es positiva. Pero luego cuando él comentó lo de que probablemente pararía, pero no cortaría, es la parte donde vino la caída. So, a partir de ahora sería como esperar a que el próximo banco cayera. O mañana tenemos inicio Jobless Claim a las 8:30. No está haciendo nada, simplemente está en el mismo precio. Ahora sí, esto no es positivo, si cae de aquí. Y este es el problema. FRC ya tocó el nuevo low y sigue cayendo. Este es el gran problema, que estos bancos siguen cayendo y estos bancos son los que te van a empujar para abajo. Y Powell habló de dos bancos más que todavía no conocemos, probablemente sea FRC y Wall. queda media hora y probablemente vayamos a terminar en el mismo precio, sin cambio ninguno. FRC sigue cayendo. Si alguien quiere comprar los bonos con un poco más de ganancia, sería este, que es por 3, ¿sabes? Como mismo como el TLT, pero este es con más 3. Sería como algo parecido a TZA. ¿Por qué? Porque si él para, esta sería toda la ganancia que podríamos tener. Esto fue en 2020 cuando él paró de subir las tasas de interés, cuando COVID, y el precio pasó de 50 a 70. Pero si él para ahora, hay mucha más subida que va. Aquí probablemente la primera, aquí 38. Estamos hablando de un 23%. O inclusive acá arriba, con un 70% en los próximos meses. No sé, SPY vuelve a caer. Simplemente está siguiendo lo que haga FRC. Si FRC sigue cayendo, SPY va a seguir cayendo. Ahí está. FRC está guiando al SPY. FRC simplemente le está guiando al SPY lo que tiene que hacer. Es increíble, un banco tan chiquito. Ahora mismo todo el mundo está pendiente de él. FRC sigue cayendo. Lo mismo que SPY. Ya. Ok, últimos 20 minutos. Va a terminar acá. Es que va a terminar aquí. Va a quedar como si nada. Oh my God. FRC destroy. Yeah. Wall todavía no ha caído en el low. Pero FRC sí. Pequeños bonds en FRC. Veremos si SPY lo toma. Sí, ahí lo está tomando. Los bonos siguen funcionando, casi 4%. Los bonos están bien. So, TLT. Y bueno, Silver baja un poco, pero TLT y Silver serían las mejores opciones. $20 minutos. Va a terminar aquí. Lo van a cerrar ahí. FRC. Oh my God. Shush. Esta sería la historia del día, porque si ellos están en problemas como Powell aparentemente dijo, pues tenemos un problema. Porque este banco, esta semana pasada, le dieron, todos los bancos se reunieron y le dieron 30 billones para que se mantuvieran en pie y no rellenaran bancarrota. Y hace unos días por acá ellos dijeron que no había problema. Ahora Powell dice que no hay problema, pero dice que sí, que hay 6 bancos que están en problema. So, básicamente él se pasó de un lado a otro. Yeah. FRC new low. Shoo. ¿Alguien sabe el ticket de Capital One? Oh, there it is. Se está comentando que Capital One sería probablemente uno de esos bancos que Powell estaba hablando. Al menos SPY está haciendo un bounce. FRC new low. Oh my God. 15%. Capital One 92. Esto no sería mal, comprar Capital One para abajo. O sea, Capital One tiene mucho que dar todavía para abajo. Porque Bank of America ya está aquí abajo y Bank of America es un banco mucho más grande que Capital One. Oh, wow. Morgan Stanley está muy bien. Wow. Ya, Morgan Stanley parece no tener problema de ningún tipo. JP Morgan me parece que tampoco, exacto. JP Morgan está bastante bien. So, yeah, Bank of America estaría en problema. Wells Fargo. Ya, Wells Fargo se habla que también podría tener problemas. Pero ahora el que más se comenta es Capital One. Ya, New Low. Uf. Ya, a partir de aquí simplemente hasta acá. Hasta 3.93 probablemente. Ya, ya probablemente vaya a ser un fill the gap de... Este gap de aquí. Probablemente lo quiere rellenar. Si rompe esta línea... Está tratando de... Está peleando ahí. ¿Ves? Esto es lo que les comentaba, ¿ves? La plata y los bonos están en el mismo nivel, ¿sabes? No subieron más, pero están simplemente en el mismo nivel. So, si hubieran comprado plata y bonos, no hay nada, ¿sabes? O sea, estamos en el mismo nivel cuando SPY anda por acá de abajo. Ya. Yo sigo pensando que lo van a cerrar aquí. Lo van a cerrar como si no hubiera pasado nada. Porque ese fue el precio que abrimos el día. En este precio abrimos el día 3.98. Pero sí, definitivamente la plata está manteniéndose. El oro está manteniéndose. Y los bonos siguen manteniendo el nivel. Ya se cayó de ahí. Uf. Probablemente hasta aquí 3.94. Ya. So, termina acá o acá arriba. 3.94. plata sigue aguantando el precio, los bonos siguen subiendo. Yeah. TLT, ¿sabe? Está muy bien.